Vamos a seguir analizando la escena de los mercados. Lo hacemos con la ayuda de Jay Pelosky. Jay, hello, good afternoon, good morning for you.
Hello, good afternoon. Hi.
We've seen volatility continues to dominate the market. Do you think that we have already seen the floor, or will the falls continue?
Well, that's obviously a very difficult question to answer, Raquel, but clearly the volatility suggests that investors are trying to find a floor, at least in the near term. We've had dramatic sell-off across all assets, actually. I was just looking at stocks, bonds, commodities. All three major assets are down and over the last week or two. And so I think we're getting close. The selling has been pretty brutal. And when you see things like in the crypto space, the declines we've seen over the last couple of days, what's left after that is if there are some people that are really hurt by that price action, then that becomes kind of the end game. The other thing to keep in mind in terms of volatility is that a lot of the large cap tech stocks, which have been holding the market up, have not now corrected aggressively. And so that also kind of suggests we're towards the end of this. I don't want to say that we're at the bottom, but I think we're very far along the way towards at least a pause in the selling.
And after yesterday's inflation data and today's data, what do you think about these trends?
Well, I think the good news is that on the PPI front, it was the lowest print since April of 2020, so 2 years. On the CPI, it was the first decline on a yearly basis going back to September. So that's the good news. The less good news was that, at least on the CPI front, it was higher than consensus expected, and so we saw that action affect stocks and bonds yesterday. But here, too, I think we're in that tricky phase of shifting from a goods price inflation environment where there was all the post-COVID demand for goods causing a sharp increase in the price of goods due to supply chain issues as well. We're now moving from goods price inflation to service price inflation. As COVID ebbs and people start to travel, they go out to eat more. Airline prices, for example, were we're up like 19% year over year in the CPI print. So we're in that transition environment between goods and services. I think given that rent and shelter are roughly 40% of the CPI, and if you look at the backup in mortgage rates, up at over 5%, backed up about 250 basis points year to date, that suggests housing should slow, or the price increases in housing should slow, and that should support a lower CPI price going forward. I think we have seen the peak in inflation. Now it's a question of how quickly does it subside.
Mm-hmm. Okay, and I wanted to ask you about the crypto market as well, Jay. We are seeing sharp falls in the cryptocurrency market. How far are they going to go? Any advice for investors looking at the stablecoins as well?
Yes, no, I think that's obviously a big question for a lot of people. I think what's been really interesting is that crypto kind of, the appeal of it was that it was an independent asset, and it was private and not correlated to other assets. And over the last 6 months, that thesis has been pretty well destroyed, I think, as crypto has really traded basically almost tick for tick with the NASDAQ. So the volatility is basically like owning a tech stock. And then more recently, of course, with the stable coins, Tether and others, Luna, et cetera, breaking down, that's created a great deal of uncertainty and fear, and you can see that in the price of almost any crypto asset. The whole idea behind crypto is that there'd be more enthusiasm and more buyers coming in to support prices going up, and so we've seen the opposite of that. I do think that crypto has always been kind of a show-me type of an instrument, and for sure now post this environment, investors, I think, are really going to demand a show-me kind of environment on the stablecoin front to ensure that this doesn't happen again. On the pricing for Bitcoin and Ethereum and others, I think investors are going to be very careful going forward. And so in a way, it's almost where we would like more regulation for crypto rather than less regulation, because you don't want to see what are quote unquote stable coins fall apart as we've seen over the last 48 hours or so. So I think crypto is really going to struggle from this point forward as an investment thesis, given how poorly it's performed as a kind of hedge assets. It's been anything but a hedge. It's just accelerated the volatility in one's own portfolio.
And Jay, Janet Yellen said just a few minutes ago in a public appearance that stablecoins are not a threat to the financial system, but they have keep an eye on them. What do you think about it?
Yeah, I think that's right. They're not broadly distributed throughout the financial system so that they could create a risk of a financial systemic risk. And that's where I think people who are saying this is like a 2008 scenario, I think that's very mistaken. That's not at all a good comparison. We have no real threat to the financial system, no real threat to banks. Households, consumers have tremendous cash savings. Companies have very great cash positions on their books, are very well capitalized. So I don't see any risk of a financial system problem. Obviously, there's a problem with the people who invested a lot of their savings in crypto and are now looking at significant declines to those savings, but that's not a systemic issue. And I think the Treasury Secretary was right in saying that there's no system threat given what's happened to the stablecoin universe.
Okay, so thank you so much, Jay. As always, have a nice day.
Great talking with you, Raquel. Bye-bye.
Thank you. Bye.